you're going to have to wait until either the stock sells off more or the news out of China is just so good that it doesn't matter. But, until they have a big, large magnitude beat, if the SOX is trading poorly, China is going to probably kind of suffer with it to a certain degree. But, I don't know if we're going to talk about charts. This is a very interesting chart to me because even on recent drops, it's not coming anywhere close to testing kind of the old prior lows that we saw, late last year. So I don't know. This is, like I say, it's one of these things where, they'll sell it off, maybe low 40s, maybe mid 40s, but nowhere close to that kind of that 33 to 35 level. And I mean, this is really nice. If you pull up a weekly chart, this is a really nice bullish pattern. It's like what I would call like an early bullish pattern. And inverse head and shoulder kind of look to it too. It's not a clean inverse head and shoulders, but it kind of shows up as one. This is like one of 3 semiconductor companies I own and or could add to.
All right. As far as some of the other semi names, one that you don't really talk about very much is Microchip, MCHP. That's right. MCHP, right?
By the way, I haven't even looked at the quarter, but here would be my guess. I wouldn't be surprised if they beat and are down 10%. Because again, this is, Microchip has been on a tear for, 3 years, I think. So, very good company, by the way. Very, very good at what they do. They kind of like a big industrial semiconductor company that makes, thousands of semiconductor companies or chips that go in everything. Really good company, really, really cheap stock. I mean, like I said, this is, I owned this at one time. I want to say 13, 14, something like this. Exceedingly cheap company then. It's basically tripled from, I want to say, the 2013 lows or something like that. So, it's, when a stock triples off of lows, even if it's taken a few years, it's just a harder game to play. By the way, they might have missed, but I wouldn't be surprised if they beat and are down. I mean, that's just, it's not a cheap stock anymore. And it's kind of indicative of where the SOX is. Companies like this are going to have to produce just jaw-droppingly good quarters to go up, probably.
All right. Well, I'll give you the results.
Am I right,
here.
By the way?
Go ahead. Pretty close. So they beat by 13 cents. Revenues were in line. Revenues were in line. They guided Q2 EPS in line, but guided their revs lower for Q2. So.
Yeah, there you go. I mean, like I say, honestly, if you would ask me about, hey, what do you think about Microchip 2 weeks ago? I said, why would you buy it here? So it's kind of the same deal. Why would you buy it here? Even if it's dropped, 10, 13 points off of highs, there's not much, what are you going to do? You're going to buy it to make 10% up and you got 30% downside? And this is a very good name, but the risk reward on a name like Microchip is very similar to, tons of other stuff I talked about that I don't like. So, go ahead.
Yeah, I'm gonna play devil's advocate and say, why don't you short it here?
I could. Probably the main reason is because I'd rather short cloud software names. There was a question that came in, by the way, on New Relic. Yes, I am still short, and I like that would be a name I'd rather. I think there's more downside juice on a New Relic, on Adobe, on IGV, on Intuit, maybe even Twilio now. I could rattle off quite a few things, but. If I'm going to accept the risk of going short, I want a pretty good payoff. Now, that being said, I am short Microsoft too. I actually think I really like the Microsoft short, even though this one might not have the potential to move as much. I actually think it's reached a very extended state. So I guess if I wasn't short Microsoft and I was looking for a sort of a less volatile a less volatile, safer short, then Microchip might work pretty well. It's not because they both start with M's. It's because they both are high quality, long. The extended move higher has been very long in the tooth. Roughly a 3-4 year move. You could most people think they're still cheap when I don't think they are. So blah blah blah. It's again, it's very similar to thinking that Adobe's cheap. Adobe's not cheap. So there's a lot of names like this that have relatively low growth that people think are fundamentally cheap because they have a quote unquote low PE or something. That's fairly meaningless. A stock that used to be cheap at 35 is not cheap at 95. So, you just kind of line it all up. But yeah, no, I could be. There's just probably other names I'd rather be short.
All right, so here's a name I don't believe you've ever talked about, and I'm not sure if it falls in the cloud category or not, but the Trade Desk, TTD.
Yeah, this is one I've gotten a lot of questions on. I just never really picked up and have done much. Again, I probably liked this early on when it was first trading, and then just kind of got a big head of I think once it got to like $55 to $65, haven't really paid much attention. I would say, I can look at this I can look at the results and I can see how much they're up today. I don't know. Is this another fad stock? I think they deserved a huge percentage move from where they came from to where they've gotten to, because they've had big beats.
Name as well.
Yeah. See, it just looks unnatural. This is one of those cases where look how much work they had to do to double or triple, and then once they doubled or tripled, look at the two spikes. There was a one-day move on this thing as big as the whole entirety of the move had been in their history. So when I see things like this, honestly, this thing might line up as a short, but the short might. This reminds me of Acacia early on. By the way, I started looking at Acacia post IPO. I started thinking, I wonder if this is short at 65. No, it's just too many nutty people trading, and I was like, I wonder if it's a short at 75. Nah. It's still really cruising. And once it got to about 120, I'm like, okay, this thing looks like an easy short. Same thing kind of like AOI. So I don't know. I'm going to watch Trade Desk. It looks like a short squeeze / cult / almost kind of reminds me of Tesla. Now, I think Trade Desk is, a very good company with good, honestly, I don't know it's a good company. I think their financials, and because I just don't know much about it as well, but I think they don't have like debt. I would assume they have net cash. They're a lean tech company. They have high margins. I know all that about them. So it's not like they have a debt position that could sink the company. It just looks weird. It's just acting strangely. Kind of reminds me of, again, I saw several stocks look like this in 2014. That they're arguably hey, Workday is the best company in the world at what they do. The Workday chart at one time kind of looked like this, and Workday, nothing was wrong with Workday, and it had a 40-50% drop from highs. So the only thing I would say on TTT is I just don't know where that ultimate high is. It could be right now. It could be another 20 points higher. It could be at 220. I don't really know, but. I'm not going to be long this, and I don't know. Maybe it sets up a short. I might dig into this. There's a guy on Briefing who's pretty much been 100% right. Would be my guess on this, because I think there was somebody who's liked it early, liked it on the pullbacks. So I don't know. Maybe when he starts saying, "Hey, the upside's getting kind of dumb on this," maybe I'll pay attention and start looking at this more closely for short. But these things are just weird. There was another stock I really liked years ago, is Intuitive Surgical. This has a look and a feel of Intuitive Surgical, and that was a stock I was long. In fact, I've been long on that a couple times. That was a stock that did really well in the post 2009 drop. But again, it has a tendency to overshoot to the upside, and there have been times that, again, nothing really needed to necessarily be wrong, and it just has these big drops, and then if they do ever miss, they get whacked. So what'll probably happen with TTD is the analysts will just get over enthused on it at some point, and the company will have a hard time beating by as much or beating at all. And you'll have a haymaker move to the downside at one, which will end up hurting tons and tons of people who bought it late. It's hard to hurt somebody that bought it at 30, because the stock could drop 50% from here and they still have a huge gain. But somebody bought the stock between 97 and $130, could get hurt on something like this. But yeah, there's always a stock or two like this. unless I'm already on them, I'm never going to look at a stock just because it's moved a lot. That doesn't, I look at stocks because I think they're special companies and they have something uniquely positive in the landscape of their competitive market. So, the fact that and maybe I should have been looking at this one from day one, but there was a whole bunch of IPOs that came out around the time. And by the way, I did great on almost all of them. This came out probably around the time that Mule and Coop and Nutanix and all those companies came out, and literally every one of those companies I did very well on. I didn't necessarily play them all from the IPO, but wherever I played them from, Twilio came out around the same time. But wherever I ended up purchasing them and then selling them, I made money on all of them. So, hey, if there's one I didn't play, well, so be it. But this one is just weird. I mean, I would just put this up and watch it. If you like fast money type trades, which I really don't. I like high growth companies, but I don't like wild traders necessarily. But yeah, I mean, if you're a guy that likes short-term action, you probably are watching the stock every day, would be my guess.
Yeah, and part of the reason I was just trying to pick your brain because it was a name that you haven't talked a lot about, and just thought I'd toss it on there to get your thoughts because of the big move. And hey, you never know if it does have the, at least at first glance when you look at a chart, this looks overdone type thing, but that might lead you into a question. Okay, why is it this high? Should it go higher and whatnot? So I thought it'd be a good opportunity since it's relevant today, and I know that there are a lot of people, for sure, if they weren't looking at it, they are looking at it now.
Well, I mean, I like this stock, and I don't know. I don't think I ever did anything on this personally, but there were two times in front of 2 quarters I basically said, yeah, I think it'd be good to be long it. That was pretty early on in its history, so it was definitely under 40 at the time. And then it did have a big sell-off, and probably in that 40 to 45 range. And again, if I could go back and just go back in time, I'm sure I didn't dislike the name, ahead of that 1 quarter. Again, I didn't do anything on it, but, so again, this is just kind of a weird, I don't know, I'll let other people kind of get involved in stuff like this.
All right. Well, let's touch on a name that you know very well, and that's Hortonworks, HDP. Now, one of the listeners chimed in and said that he held it through earnings, but it was too quick to take a profit. So where do you see HDP now?
Yeah, I'm not selling any yet. So, I mean, this is basically a breakout play. So I've talked about how much I like this. I liked this when I first joined Briefing. This was one of my longs that had a big move higher. I sold it, was out of it for probably 6 months, bought the pullback. I don't know, where was I buying this thing? 1650 to 1750, somewhere in there. And I think I added to it at least once or a couple times. And honestly, this is a very cheap stock. I mean, I don't know what TTD's official growth rate is, but I would guess that Hortonworks is probably not much, unless TTD's growing at like 80 or 90%. Hortonworks is probably growing at a fairly similar growth rate. And this thing's cheap. I mean, this thing is, so I said Redfin on relative metrics trades at basically 1/3 the valuation of Hub. So does Hortonworks pretty much trades at Redfin's valuation. So now that doesn't mean Hortonworks is going to triple, but what it means is it could triple, and it wouldn't be any more expensive than HubSpot if it did triple. That's what it means. So, but no, I mean, I think this thing has a lot of tailwinds now. They kind of had to fight through some headwinds. Sometimes stocks trade weirdly because they get hit hard. And these guys had like a 50 to 70% drop one time on a miss. Again, wasn't a big miss. The stock basically went from like 20 to 7. It probably should have gone 20 to 14 or 20 to 15, but went 20 to 7. And then they've had to put in a lot of good quarters to get their street cred back. And even now, I mean, I think there's a lot of doubting Thomases on it. But, this is one of those ones, if you look at forward estimates, they're probably only expecting them to grow like, 20-25%. I wouldn't be surprised if Hortonworks is still growing 35 to 40%, a year or two from now. So, and that was kind of the story when I first started liking them. I mean, they were just wrecked and they were so cheap. But the analysts had the growth assumptions were pretty low, and I'm like, this is for this year. The last 3 or 4 quarters. I was like, yeah, Hortonworks is going to be a 35 to a 40% grower, which basically they have, if not more. And again, I remember the analysts were, I think down in like the low to mid 20s on the name. It very very similar to Twitter, by the way, where the analyst community was just pretty much missed it. And then I think the analysts started liking it around the time when I actually first sold Hortonworks a few months ago. But no, I like the name. I mean, but like say, what could happen to this could go from being not just a fundamental growth story that starts getting its due, but actually kind of becomes one of these anointed stocks that starts trading at least at a market multiple, if not a premium. So, I mean, if this thing were traded at a premium, I don't know how high it's going to go. So, but yeah, I mean, you got what's the all-time highs on it? Probably like 28 or 29. I mean, you never know. This thing could sniff all-time highs and then go even higher. Here, let me look. My official target on my focus list again, which I'm going to update on Monday, is like 31, I think. So that's still implying pretty good upside. And that's a pretty conservative target. I mean, that's only using, I think, that would still probably be a 50% discount to tons of other growth names at $30. So, you know me, that's kind of how I do a lot of these. I even said, Twitter could trade to 35 to 40 and it would still be a huge discount to a lot of other peers. And then Twitter ended up going pretty nicely above that level.
All right. So speaking of Twitter, we've got one listener who would like your comments on it. I know you've said it plenty of times. We probably talk about Twitter a lot, but I think he's probably frustrated with the lack of movement that we've seen after it looks like it may have put a bottom in place close to the 200-day moving average, but really hasn't reacted. Probably didn't get that throttled move that he was looking for. So why don't you comment on that, and in context, talk about how you use time as a factor, or how time factors into your decision-making process, especially on the way out.
Yeah, I mean, to me, it's a different, my perspective. I think people have forgotten what short-term and intermediate-term and long-term means. I think the average trader now thinks short-term is less than 2 hours, intermediate term is 6 hours, and long-term is a week. and in my view, short-term is more days to weeks, intermediate term is more months to quarters, and long-term is a couple years. So, this thing, it's only been down 2 weeks. I mean, so sometimes you just kind of have to kind of rethink your thinking. It's only been down 2 weeks. And again, here's what I like about Twitter. It's actually acting like how a stock should act. Now, should have gone down as much on numbers, and hey, who cares? I mean, the point is it has, right? We can't deal with what we wish would have happened. We have to deal with the world as it is, and then make a judgment from the point, from every new point, right? We have to basically, I call it being present. It's like trading in the zone, or doing athletics in the zone. You want to be present. So the bottom line, though, is that it really hasn't been down that long. I think it dropped more than it should have, but it is where it is. And I've written a ton on this. I think it's a pretty good value here. Again, it's not nearly as good of a buy as it was at 18. But again, relative to what they've achieved, it's the best buy it's been since they were 26, 27. After the drop off of the then high 36.80. So, but again, what I can't stress this enough. I like stocks that act normally. Twitter's chart looks normal. Twitter's chart, stocks do drop 20 and 30% off of highs, right? The stocks that haven't done that for years and years, that's abnormal. So even a stock in a powerful uptrend can have multiple 15, 20, 30% corrections in a year. Again, that's normal. So I don't really worry about that. I'm going to keep adding to Twitter. I'm probably going to get it back to a pretty notable overweight. And we'll see. But like I said, I said this, I think, the last few times we've been on. 9 months ago, analysts had zero growth to negative growth baked in for this last quarter. Twitter just did 23%. And that's 23% off a pretty decent base. It's not Facebook's base. It's not tens of billions of dollars, but it's billions of dollars. And, here's the only thing I would add, or I would stress, that I've said, that maybe I haven't written this recently. I think Twitter's going to take market share from Facebook. I think they are taking market share from Facebook. The pie is relatively limited, so I think you're gonna the war is gonna be between Google, Facebook, and Twitter for the most part. I think Twitter's gonna win a bigger chunk of the war and grab a bigger piece of the real estate over time. Here's the one thing I would say too about, I used to write this years ago, and I just haven't penned it because I think I don't like saying the same thing over and over and over again. The one thing I would say though is everybody has MAUs wrong on Twitter, and this view has helped me make a lot of money on the stock. So the people that focus on MAUs and DAUs don't really understand this space. And what I mean by that is Twitter data isn't consumed by the people that are the MAUs, the 300 and some million people. Twitter data is consumed by something like, now I don't know if Twitter's refreshed these metrics, so some of these metrics are like 6 months old, but the eyeballs that look at Twitter data is in the 1.5 billion range. It's like 1.1 to 1.5 billion eyeballs view Twitter data. So I don't know if that's daily or weekly or monthly, by the way. I know it's at least monthly. My guess is probably more like daily. So Twitter data is out there and consumed and used by 3 to 4x what the MAU number is. So that's really the thing that you probably need to think about if you're really going to analyze Twitter and think about it long term. If all you're going to say is, oh, it's a limited platform, look, they don't even have as many MAUs as Instagram, if that's your view on Twitter, then you actually don't understand Twitter. So Twitter's a platform that has far more viewership, far more data intensity, far more usage of its data and platform than the MAU or the DAU number. So if you're going to pan Twitter and you're going to say incorrect things about it, then Twitter's probably going to steamroll you over time.
And I think that had a lot to do with the frustration from this listener who, and I'll just quote from him, you hear the comments from the media talk about this tweet and that tweet and have not seen this much talk about something in years since Facebook came public, and everyone was talking about that, and yet he hasn't seen the movement and thinks, is it too simple? And maybe it just is.
Well, stocks are complex beasts. Some stocks actually move on simple information and simple data. Sometimes stocks, they'll move on complex stuff. And, Twitter will probably always be a little bit more of a complex thing. But again, if you think about the things that will create the ultimate revenue, meaning like, okay, what's the revenue for Twitter 5 years out? What's going to comprise it? What's going to make it grow? It's not the fact that they have a limited audience of 300 million people to advertise to. Again, but that's almost all you hear. Even quote unquote experts. I mean, I've heard analysts say stuff like that, and it's sort of like, you're an analyst, and that's your view of Twitter. Okay, now I don't have anything to worry about your opinion, right? So, but yeah, I mean, there was. I mean, there's also. I mean, I think that's part of the reason why Twitter wasn't sold at a really cheap fire sale price at one time, is because the people that are the big investors and the people that are the big backers in Twitter fully understood that it was not. It was not a limited audience play that I think the naysayers and the bears would have you believe it be. So anyway, the bottom line is that suffice to say, there's a lot of power in the platform, and the power will come. I mean, I do have a hard time understanding how. I guess that you could be frustrated if you bought it at 34 and you didn't own any before, and you've been down for a couple weeks. But hey, I get you were a late buyer. So it's better than buying it at 46. But if you bought it at 34 and you didn't buy any of it before, then you're going to have to wait your turn, I guess, because Twitter's paid off nicely to the people who are buying it at 25 and 20 and 18 and 14. So the company's pretty much done. I mean, if I'm not disappointed in Twitter. And, again, it acts normally. I mean, when did Twitter go from, 40 to 20? Well, when they had bad news. And then when did they go down even deeper? Well, they still had bad news. It probably wasn't as bad as it probably didn't deserve to go there. But, at least it acted normally. So, and then when things started turning around, it did take a while for it to come up. But when the revenue growth started ticking up, guess what? Twitter started working. So, I mean, Twitter the stock will probably kind of follow a path of its revenue growth, would be my guess over time.
All right. So you previewed that you will have your focus list coming out on Monday, but I'm sure you've already dove into it. So if you could just kind of give us what you're looking at, maybe an early preview to that focus list that will...
Well, I probably was going to talk about HTTP or again, there's always little snippets, little notes on the side, but I always try to highlight a few names, anywhere somewhere between 3 and 5. We kind of hit on Hortonworks. I mean, I think Hortonworks, I think it's a relatively easy trade to like 15 to 30. So my target's 30, 31. These things, once they have a good quarter, they finally can get kind of let up, the bubble that rises to the surface type trade. It still trades at a huge discount. So that's kind of an easy, that's it. I mean, again, I don't mind momentum. I mean, to me, that's early momentum, or maybe it's better said, it's like renewed momentum. So I like to set up that. I also think they could have a potential to lift Cloudera. Cloudera trades roughly the same multiple. I mean, you would think, well, given that Cloudera's been beaten up, it would trade cheaper than Hortonworks. They really traded about the same multiple. So, Cloudera at like 22, 25 was quite a bit more expensive than Hortonworks. The recent drop basically kind of level set it with the valuation of Hortonworks. But I might have written this. I think Cloudera and Hortonworks are probably two of the easiest longs to pair against other software shorts. So that's probably something I was going to talk about. For me, a lot of it's kind of all systems go. I mean, I like Twitter. I like the fact I'm adding to it. And then the other thing, again, it's weird. I never see this mentioned much, but the fiber optic stocks have really made a hard turn. I think we've gone from a recovery mode to now, I think, making a hard turn. And what I mean by hard turn is this is a quarter where it's actually a good quarter where they're producing winning reports with beats, with guides higher, and things like that. Generally, when that happens, it's not a one-quarter phenomenon for this group. You usually have multiple quarters in a row. By the way, that's kind of true for any tech stock. If you get one significantly good quarter, you usually have a pretty good trade for another quarter or two. That's just kind of trading parlance, by the way. But with this group in particular, the cycles tend to be magnified. The down cycles are kind of brutal. The up cycles can be pretty spectacular. But there's always kind of disbelief on both sides. Like, so remember when AAOI was going from 90 to 70 to 60 to 50? It wasn't until it got cut in half that the bears or the bulls kind of believed that things were bad. And same thing. It's like when things start going up, there's a disbelief until enough movements occurred that people, again, I call it the 2x4 effect. They get hit with the 2x4 across the head enough times and they have to change their mind. But I think the fiber optics group in particular is pretty exciting to me. And again, I like the setup into next year, because next year, what is most of tech going to have? The story for most of tech is going to be tough comps, high stock prices, high valuations, blah, blah, blah. Well, what's the story for fiber optics and 3D sensing? Easier comps, or really easy comps, low stock price, extremely low relative valuations, and much higher year-over-year growth. And by the way, I could have said the opposite. So the tech that's been really winning for the last 2-3 years is going from high growth to muting growth to lower growth, right? So the concern is, hey, are we paying a really high valuation for decelerating growth? The fiber optic space is potentially just the opposite of that, and then 5G could make the same argument. But yeah, that's probably about it. And pretty good setup for that group. I still think we have Finisar yet to report. And again, I don't want to sound flippant. I almost don't care how they report. I mean, I think they will probably report better than they have because the industry group. But if they don't report really well this quarter, then it's just going to be a quarter or two away because the same drivers are ultimately going to lift their results as well. Light did have a very good number. I'm still surprised we haven't seen a 60 handle on Light, although we're getting close, 59.70 right now. That's still what, like, okay, so why does TTT go up? Whatever went up today. I mean, Light crushed it. They had like a 30-cent beat. I think TTD had, a 15-cent beat. Again, this is why you could drive your crazy trying to rationalize the movement. I don't even worry about that. things go where they're going to go. And if you get enough of them right and get them right to the right magnitude, you still do great. So, but again, Light had a crush. They crushed it, and they had a very, very sound guidance. And by the way, what is nirvana for old line semi and component companies is when they talk shortages. That's always the old, hey, they would have had a better quarter except they had shortages or they sold out. That Light mentioned that a bunch of times in their call. That they literally had shortages, product shortages, inventory shortages, supply shortages, blah, blah, blah. So the quarter would have been better. So they're having to put more money into, making sure they can meet higher demand. That's a good problem to have. And I think that's kind of going to be the setup for that group for a while.
All right. So are there any other stocks that you want to talk about, maybe outside of your focus list? Actually, there is one thing that I want to address, and there's a listener who chimed in asking, what is this focus list and where can you find it?
Well, one, you can just type focus into the ticker, and it comes up. Or all the times I've mentioned it comes up. So you could type Techt and then search for focus. But yeah, if you type focus, there's a few things that it's going to show up, and there's links to it. And you might have to look, every week or 2 or 3 weeks. But yeah, I'm looking like right now there's a link on July 9th. There's one. There should be one since then, by the way. But I just quickly typed in focused and just kind of like did like a speed read on it, and I found that link right away with 1 or 2 page down clicks. So yeah, type focus, it's in there. And again, I don't change like 30 positions every week. My positions are relatively static. My last update was one of my bigger updates in a long time, by the way. I had five name changes. I think that's the most I've ever done when I changed the list. So, but yeah, like I said, that's it. Just type it in, scroll down, you'll see it. And most of the stocks I'm talking about are, I'd say half the time, again, it's only 20 stocks though. I talk about way more than 20 stocks, but a good percentage of the time I'm talking about relatively some names off of it. The only other thing, I keep looking at biotech. It's not acting well, but again, that doesn't matter to me. That gives me opportunity. ACAD didn't have a very good report. They actually lowered revenue numbers, but the setup for them is still just as good. They do have an approved product, but they only have one, and they have a lot of things in the pipeline. This is kind of one of those ones I mentioned, that ICHR, how they guided lower and the stock has reacted pretty well post-report. ACAD's kind of the same thing. ACAD, they might have tried to spike it down real quick, but it wasn't down very long. I think it might have been down like 5 or 10 minutes of one day. And by the way, had I seen the stock at 13 or below, I'd have bought more. I didn't even see it that low. But it spiked up and bounced that very same, probably within that same 15-minute or 10-minute bar. So that's one. I like. The DVAX is interesting. There's a whole, we could almost have a call on the biotech setup, because if there's a group of stocks, especially small cap, mid cap, and spec biotech, now it's the riskiest part of biotech, but it just hasn't done anything. Like this whole recent lift in the almost the whole lift this year in the NASDAQ has done nothing for the bulk of biotech. Now, a few names have gone up. There's probably 3 or 4 what I kind of call anointed hyperstars of biotech, just like we have in tech, that probably have garnered all the market share or market cap gains. And outside of that, like everything else is just trading poorly. I mean, ICPTs, by the way, that's on my focus list. That's been a crusher. I think I recommended that at 60, and it's like 114 now. I'd have to go back and look exactly, but I think that does ring a bell. It was either like 51, 55, 61 or something, where I swapped the name out and said I'm putting Intercept in replace of a tech name. And that one has done really well. But the number of names in the biotech space that have been big winners is relatively small. And a lot of stocks that were trading much, much higher have gone down a lot. So, I mean, that's one area. The only problem I have with biotech, I just can't put that much money into it. One, it's not my focus area. I don't put all my research time into it. Two, any given biotech name could be just massively risky. I kind of view it as almost stock option, like leap type money. It's not like short-term stock option money where you get a 94% chance of going to zero. It's more like leap odds, which is still well above 50%. You have odds of losing your money. But I don't know. That's a name. That's a space. And I mean, I've even seen a lot of good results out of these things, and they still get rated lower. So I think that's kind of a liquidity issue. And I don't know. I don't know if that's a sign of like something the broader market's going to have to face, or if it's just a sign that FANG is still in favor and a very small number of stocks are sort of soaking up all the buying power every day. I don't know. It's just one of these things that we kind of live with right now. But what I do know is it does make these stocks cheap. Denali is a stock I own and I bought pretty good, but it's probably below where I bought it. That's DNLI. Same thing. I haven't really seen any bad news out of them, and the stock just keeps going down. So I don't know. I keep kind of nibbling here and there with some trading gains on some of these biotech names. But again, I don't put that much money into them. But you don't need to. I mean, if you have a 1 or 2% portfolio bet in a biotech name and it goes up, when these names move, they don't go up 20%. They go up, 100, 200%. So, a 2% position can easily become a 4 to a 6% position if it's a winner in this group. So you don't need to make big bets to have them make a really, really nice impact to your portfolio. But yeah, I would say that's about the only thing that maybe people should be looking at if they're kind of wanting to find value that has kind of either been ignored or just been rated lower even on good news. And again, I don't really know a reason why, except other than all the things we always talk about. And by the way, I mean, I do think we're coming into a period where I think we got tougher sledding for the market for like days to weeks. Probably the way this thing's been going, probably more like days. But yeah, things are creeping up. Sentiment's crept up. The averages, wasn't it just 2 days ago we were talking? Yeah, they're getting pretty close to like all-time highs on a few of these indices. So there we go, right? But the VIX is super low. I think it was 10 yesterday, 10 2 days ago. So the recipe's out there for a little bit of a meltdown if the machines want to create some fear again short term.
All right. Well, guess what? We already got a request for you and I to do a call on biotech specifically. So I'm going to give you a homework assignment, and maybe next week.
I mean, I could do it anytime. Now, again, I'm probably not going to talk about like names that maybe people own. Like, I'm not going to talk about Amgen. I might talk about Celgene. I mean, that's another one. I don't own any, but I'm sure I wrote on the site at least twice that I'm like, look, if you want an ultra cheap, super good, high quality mega cap or large cap stock, at $80, Celgene's a no-brainer. I mean, that's working pretty good. What is that now? 100, something like that. So, I mean, they're every now and then these things just kind of creep up, and you get these really good buys. So we could talk about that one, but I tend to, I guess it's 91.50. I tend to focus on these more obscure. Basically, I call them tactical bets. So you kind of have to be able to withstand a 35 to a 60% down move. But man, when they work, these work huge. So, those are the ones I tend to look. Although, again, Gilead's another one. I mean, if you can stomach it long enough, you're going to get a big payoff in Gilead. But in fact, that's been down a long time. So, there's a few big ones out there that I think have a lot of value. But yeah, I'm going to spend time talking about the more obscure names if we do that call.
I think we will. And if you recall, maybe some of the listeners recall as well, we did a call just like that. Probably it was in between the last earnings season, maybe at the tail end of the last one, because I still have a bunch of these names written down that we talked about. And so, yeah, circling back on that idea would probably
they're probably all relatively the same names. Maybe there's a couple more. But yeah, it's an interesting space, and I don't know. It's just one of these. It was a very hot space, though. It was, again, this was a bubble group in the spring of 2014. So I think what's happened over the last 2-3 years is basically it's working off of a prior bubble, and that's always a painful period for a group of stocks. Now there was a crazy short-term buying potential in the spring of 2016 for the biotech group. But yeah, I mean, this was probably a bubble group, spring of 14, and it's probably been digesting that for the last 2-3 years.
I'm pretty sure it was back in May that we did that. Just looking back through my notes, I'm pretty sure it was in May. So yeah, it's a good time to revisit that, and also you can give some color on what you look for when you look for a biotech stock, because I know you have specific things. Don't give it away just yet. We got to tease it a little bit.
We can set them up.
Yeah. I did that with Scott earlier today. I said, okay, well, we're going to need some things to talk about if things slow down. And he's like, no. He just went out and like, okay, well, I guess we already covered that one. But yes, indeed, the biotech sector is complicated, so it's worth taking the extra time to prepare for it and not just go off the cuff, and you probably get more out of it, and I'm talking to the listeners that you'll get more out of it, because I learned a lot from what you said last time, and it's always worth revisiting, especially after it's already been at least a quarter, if not more, since we last talked about it.
Yeah, no problem. I'd be happy to do it.
All right. Well, I think that really sums up a lot of what we had planned on talking about. Unless you have anything else, we can wrap this one up and put a bow on it and pick it back up next week.
No, let's just pick it up next week.
All right, sounds good. As always, Sean, thank you so much, and we will talk then.
All right, take care.
All right,
have a good weekend.
You too.